Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the 3 consecutive days, the US dollar, which measures the greenback strength against a basket of 6 major currencies, has tumbled away from its near 20-year highs around 105.03, and from the descent now looks towards its short-term trend, which is around 103.10.30 area. In light of the pattern, it is quite clear that if the market breaks this level, we could see a further decline down to 102.30. With a heavy MACD and also the RSI married up to the negative signal, may see a little bit of pressure into the US dollar into the next coming days. This in terms would see the euro become under less stress as the market's recently seen, and therefore from the rebound of 103.40.60 area could see a further upside challenge as we currently trade close to around 105.50. In light of the pattern, a break of 105.60.80 would give further indication. That is a rise towards the next target, which is seen around 106.45. And in light of the pattern, could easily see this if we see a break, that is of 105.60.80. Although I'm a little bit cautious of this call, as we've recently seen upside tests do tend to fail. So we may find good resistance around 106.45 and therefore could see another downturn. Looking at the Australian dollar, the market regained its momentum after breaking through the level of 69.90. And from there, the market has reached up towards its next target, which is seen around 70.45 to 55. In light of the pattern though, I feel that from the bullish divergence kicking in from the MACD, the RSI now married up to a potential rise of at least towards that 70.45.55, and a break will give further scope up towards the region of 70.95. Dollar yen still coasting sideways, and at the moment still attempting to reinstate its bullish bias. As we've noted over the past, every time we do see a sell-off for dollar yen, the market is snapped up quite quickly, and with the support holding around 127, figure 45 could again see that happening if we see a decline towards that region. In the broader scheme of things, I feel that 127 to 131 is the range as we now trade sideways and look ahead to see if the bear case has any more depth below 127. Finally, we saw and also a strong rally in sterling. I've been holding the view that the MACD bullish divergence will kick in, and it clearly has. After the market broke above 123.15, the rally is now on towards the target of 126 figure 40, where we saw a recently challenge and a very heavy sell-off back to 123. But in light of the pattern, we do have a married up MACD and RSI, so I'm not backing away from this bullish view as of yet. A little bit of a mixed price action when it comes to sterling Kiwi. The market still appears to be trading somewhat in erratic mood, and therefore further upside tests towards the region around 196.40.80 may find again a disappointment for the bulls, but we're not seeing the technicals break down. So do be a little bit on your guard if you are looking to go thinking of a trade around this level, because if the market doesn't hold at 196.80, then we could easily be looking up towards 198. An interesting price action for gold after the market rejected the level of 1,788 and therefore rallied and posted a bullish hammer. However, from the rally overnight, the market hit a wall around this trend line, which is seen around 1,836 to 39, and from that the market dropped. In light of the pattern, that was a call last night. I was looking for a rise, but whether or not we could break this trend, I wasn't clearly convinced due to the fact that the RSI is still in negative territory, and along with that with the MACD. And if so, from the rejection, could now see a further downside attempt if we see a close under 1,809. This would give further indication to the bear case and the rejection to the top side, and look for a further challenge to 1,788 to 92. Looking at the oil price action overnight, the market retreats from the 113.14 recent rejection area that we saw back in March, with the market a little bit indecisive from this candle here, which is not quite close to a long-legged doji, but still I feel the market has got a good tail and a good wick that gives us an indication that there's a bit of divergence here on the RSI that we may be seeing a pullback. And if that pullback can continue, then I'm looking back towards this region, which is around 106.40.70, and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me, but please keep an eye out for the intraday report and also the end of the day wrap.